everyone. So if you landed on this video, you probably clicked for one reason and one reason only, because you're interested and or curious on how you can make $100 a day in the stock market. So I'm going to kind of go over a very, very simple method that you can apply each and every single day that the market is open to help you make and achieve your goal of making $100 a day. But before I get into that video, guys, if you could do me a favor, click that bell icon, subscribe to my channel. Also, leave me a comment when you're done watching this video and give me a thumbs up. Also, if you guys are looking for a community to join where you can kind of get a little bit more access one-on-one to me and the stocks that I'm trading, as well as trade alongside of some other amazing traders that I have in my Discord, that link to join is down in the description box below, completely free. I also do have a website, evolutiontraders.com, that you guys can check out. But let's get into the topic of this video, and that is making $100 a day in the stock market. Whether you're a beginner or someone who has a very, very small account just starting out, I always recommend that even if you do have money, let's say you do have $20, $30, $40, $50,000 to invest into the stock market, and you're looking to start getting into scalping and or day trading, I would highly recommend starting off with a very, very small account, just due to the fact that if you don't know what you're doing and you don't know how to manage your risk and control your emotions, you can pretty much lose a lot of money and, even blow up your account relatively quickly. So I always recommend starting off, I try to tell people, if you could start off with $3,000, $5,000, $10,000, that would be great. I know some of you guys can only start off with something like maybe $1,000. You can even get started with that as well. Now, just to get into a little bit more detail, the number one way that you're going to be able to do that, to make that $100 a day, besides looking for, penny stocks or the next meme stock or something that's going to explode or pump, or, something completely crazy, is you're probably going to be needing to trade options. And if you're not familiar with options, you can just go on Google, Investopedia.com, and type in what are options, get all the 411. I'm not going to really sit here and lay out what exactly an options contract is, because I'm sure most of you guys who are watching this video probably already know what options are. So with that being said, we're going to start off trading options. I'm just going to use two general examples throughout this whole video. That's going to be somebody who has $1,000 account, and let's say somebody who has a $10,000 account. So just starting off, if you have a $1,000 account, we need to first identify and specify which stocks you can actually play. Okay. So with that being said, we're not going to be searching every single scanner, looking on Wall Street Bets or on Twitter or on YouTube for, these crazy penny stocks or this undervalued company that can explode in the next 3 months. That's really not my game, and that shouldn't be your game either, because that can lead you down, a very, very dark hole of always trying to search for the next best thing, when instead, let's just treat this market like the way that the big boys treat it on Wall Street, and let's trade the stocks that move each and every single day, stocks that have good average true daily ranges, and things that have good liquidity. So meaning that we're going to be able to get in and get out of these contracts. We're going to be able to get in and out of these particular stocks, and these stocks are going to give us enough room and enough spread in the day to be able to make some good money. So some of the stocks that I'm going to recommend are going to be based on different account sizing. So I'm going to start off, if you have a $1,000 account, we're not just going to go out there and start trading Amazon, Tesla, even NVIDIA's contracts can be expensive. Shopify's contracts can be expensive. We're not going to go out and start trading some of these big dogs like that. So if you have a $1,000 account, I would focus on companies like Apple, companies like AMD, companies like Microsoft, companies like Facebook. Each and every single one of these companies is going to give you enough true daily range. What that means is the stock is going to move whether higher or lower enough so you can be able to capitalize on those particular moves intraday and be able to come out and making $100 a day on your options contracts. So kind of getting into the strategy, first things first, what we want to do is, if we need to come in with a bias. But however, if you come in with, let's say, a long bias and the stock market, completely rolls over for the day and pulls in, and you're not ready and have a trading plan that is going to allow you to switch your bias to the short side, just don't even play it. Okay. So with that being said, we're going to want to go to the daily time frame on the stock that you want to trade. So I'm going to talk to people who have $1,000 account. Let's say we want to trade Microsoft. we're probably going to be able to only buy one contract just due to the fact that you don't want to risk too much of your account size on one particular play. The whole name of the game is to stay in the game. And if we go and buy 2 or 3 contracts of Microsoft and the trade goes against us and you don't know how to manage your risk well, you can really drastically draw down your account 30, 40, 50, 60% on one specific trade. So that's not what we're trying to do. We're going to focus on trading one contract, something that is within your price range. I would recommend trying to find contracts that cost anywhere from $100 to $250 if you have $1,000 trading account size. If you have a larger account, like let's say 10,000, I wouldn't risk any more than $1,000 per trade. Just due to the fact that's going to be 10% of your account. So even if that options contract or that particular trade went all the way to zero and you lost that $1,000 on one specific trade because you did not manage it right, you wouldn't blow up your entire account. You would still live to trade another day. So with that being said, talking to the person who has $1,000 in their trading account, what we're going to want to first do is go to the daily time frame. And on this screen, I have Microsoft pulled up. So we're going to want to find a stock that is in an uptrend. Okay. We're going to want to find a stock that is in an uptrend, meaning that the trend is up. Are you going to have, minor dips? Yes. Okay. Any stock in an uptrend or a downtrend is going to have minor dips, but the overall direction of this chart is to the upside. So meaning that we are going to be looking to play calls, meaning we're looking for the stock to go higher. Okay. We're not going to be betting that the stock is going down when the stock is in a current uptrend. I hope that makes a little bit of sense. So with that being said, once we identify whether we're going to be playing calls or puts, then we can start looking at some of the smaller details. And with that being said, we're going to use also the 1 hour time frame. Okay, we're going to be using the 1 hour time frame, and then we're going to be making sure that the stock is trading right around the 20 period moving average. So if we just go back to the daily time frame, we can see here that majority of the time that this has been in an uptrend, Microsoft is trading over the 20 SMA, and that's exactly what we want. So for example, when we are in an uptrend, like Microsoft is in now, and the stock is, let's say this time period here, and it's trading below the 20 period moving average, which is a 20 SMA, we are not looking to buy calls. Okay. So if we're in this range here, we are not looking to buy calls. And then if we're in this range here, we are not looking to buy calls. And if we're in these days here, we are not looking to buy calls. Okay. So we want to make sure that the stock is trading over the 20 SMA, and that's going to give us a better trade on the call side. So with that being said, we're going to go over to the hourly time frame, and this is where the nitty-gritty and the simplicity of this strategy is going to work. So we're going to be taking one contract in Microsoft, and the levels that we are going to mark out on the daily or on the hourly time frame is going to be like this. We've already identified that Microsoft is in an uptrend. Okay, we've already identified that we are trading close to or above the 20 SMA on the daily time frame. And now when we switch over to the hourly time frame, let's get into how we are going to enter and exit this particular trade. Okay, so with this being said, we are going to take the pre-market data, okay, the pre-market candle. So in this case, yesterday was Friday. That was the 10th of December. We are going to take the pre-market high and we're going to draw a trend line, okay, over this pre-market high. Oh, excuse me. This is 5 a.m. We're going to take our trend line and we're going to draw a trend line over the pre-market high. If you want to include the wick, I would include the wick. I know some people just use the body of the candle, but I always like to include the wick because there is some buyers up in this range as well. And then we're also going to make a trend line at the pre-market low, okay? Pre-market low. So once we've identified the pre-market high and the pre-market low, what we are looking for is to at least let the first 5 to 15 minutes of the market unfold. Because a lot of times, as soon as the market opens, there's a lot of volatility. The stock can shoot up higher. It can drop back down. It's trying to figure out its direction for the day. Normally after around the first 15 to 25 minutes, even 30 minutes of the market open, normally the stock has found a trend if the stock is going to go higher or if the stock is going to go lower. So in this case, on Friday, Microsoft not only went higher, but exploded 2.83% and $9.44 on the day, closing at $342.54. So as soon as we have this identified here, this 5 a.m. candle that's going to be closing at 6 a.m., and I am on the Pacific Standard Time, so if my time frames are a little bit different than yours, just kind of correlate that to your specific time zone. But this 5 a.m. candle here is going to close at 6 a.m. and at 6:30 a.m. is when the market opens. So when the market opens, if this candle takes out the pre-market high, that is when we are going to enter the trade. Now, if we just break that down to a 5-minute time frame so we can kind of see how this played out on a smaller time frame here. So if this is our pre-market high here at $336.34, what we are looking for is a confirmation of the pre-market highs to the long side, and this is when we're going to be buying our options contracts here. So at 6:25 in the pre-market, we kind of shoot up one more time just 5 minutes before the market. So actually this trend line should be moved here because this is our new pre-market high. You can see here right at 6:30. Oh, excuse me. Yeah. Right at 6:30 here. Okay. Whoops. Okay. This candle that I'm highlighting here, let me bring out my drawing tool. This candle that I'm highlighting here is a 6:30 open candle. That is when the market is going to open. Like I said, we want to let the first 5 to 15 minutes kind of sort itself out, just due to the fact that you don't want to get caught jumping in pre-market highs here only to have this candle pull back and start going down here. Okay, that's not going to be good. So we just kind of, you're not going to miss the boat. Don't feel like you're going to get any sort of FOMO. You know, there's always another trade, there's always another stock. You know, just let the first 5 to 15 minutes, that's all I say. That's one of the biggest rules that I'm going to tell you as a new trader, is just let the first 5 to 15 minutes settle. You know, I speak to traders. There's also traders in my Discord that let the first 30 minutes of the day settle before they think about jumping into a trade. To each his own, both are good. But what I recommend is just try not to jump into any trades that first 5 to 15 minutes of the market open. So we can see here, immediately once the market opens, we take out this pre-market high. This is going to give us a thumbs up that we are going to be looking to play calls on Microsoft. And when we select our strike price on Microsoft, again, keep in mind, we don't want to spend any more than $250 if you have around a $1,000 account. So we're going to try to find contracts, options contracts that are either right at the money or just outside of the money. And normally you'll be able to get these contracts for that budget that you're going to be able to fit into your trading plan. 5-minute candle opens up here. We get 1, 2, press 1, 2 pushes higher, and then we immediately get this pullback. And where do we get that pullback? We get that pullback right back to the 20 SMA. And if a stock is going to be strong and the stock is going to continue the uptrend, we are more than likely going to hold this 20 period moving average. Okay, that's just the way it is. So being that we're looking to day trade, we're looking to enter into calls. We're looking to enter into calls at least after the first 5 to 15 minutes. So you can see the first 5, 10, 15 minutes, we're on this pullback. We're going to wait for this pullback to happen. And as soon as we get this bounce area here off of the 20 period moving average and the stock starts to reverse from red to green, and you see us clear back over these pre-market highs, all systems are a go. And we would be entering this stock depending on the slippage and depending on the time that you actually caught the trade. If you're watching it on a 5-minute time frame, you should be watching it pretty closely and try to snag it as close to 336.32 as possible. But let's say we get in this trade. I'll give you guys a little bit of slippage because you guys are new here. Let's say we get into this trade at around $337. Okay, so $337. Our options contract cost $200 to $250 on this particular play, or that's where we want to keep our contract, you know, in that specific range. And within 5, 10, 15, 20, 25, 30, 35 minutes, this contract put in, or this stock put in a high at $342. Guys, that is a 5 point in the money move on your options contracts. And if you were to take one contract, this contract was going to move 20, 30, 40, 50, even 100% in that short a time frame. So let's say on this particular play, this is how I would explain to take profits. Okay. If you are new and you are an absolute beginner with relatively no experience, and you get a move like this in your favor within 30 minutes, okay, you get a move like this in your favor within 30 minutes, and your contracts move 20, 25, 30% within 5, 10, 15, 20 minutes, immediately I'm going to sell, take my profits, lock it in. I just won. I'm going straight to the bank with that money. And if your contracts costed $250 and you just made, let's say 25% of that $250, you just made your $50 to $100 on that specific trade. Now, if you have a little bit more risk tolerance, if you can control these emotions when the stock is going up and down, because even though these bars are green, okay, that just means we closed green. There is up and downs that are going on in these specific candles. So if your emotions can manage that and your contracts moved 100%, you would have made $250 on your investment in just under 35 minutes. But again, this video, we're looking to make around $100 a day. So what we would need is at least a 40% move on our options contracts, 40 to 45% move on our options contracts, being that our contract costed anywhere from $200 to $250, we would get pretty close to that $100 level that we're trying to get. Now, as a trader, I would never put an exact dollar amount on how much you want to make a day. I know it sounds great to say, if I could make just $100 a day, if I could make $500 a day, if I can make $1,000 a day, those big whole round numbers sound fantastic. But the way that the stock market is, and the way that, the emotions, being that we're all human beings, the way that our emotions work, sometimes, holding out and hoping for that $100 move or that $1,000 move, sounds nice. Sometimes we have to just take the move that's in our favor. So if you were to get a 20% or 25% move, okay, and your options contract costed you $250, okay, you're going to be making anywhere from $50 to $75, depending on how fast that those contracts are moving. If you make a 50% return on this particular move that Microsoft did in 35 minutes, okay, 50% move on this contract, which I guarantee you that in at the money or just right outside the money, okay, right outside the money contract moved, you would, let me switch my cursor here. A 50% move on a $250 options contract would have been $125 win in just about 35 minutes. You can turn off your computer screen. You can go on about your life, go on and work your regular 9 to 5, do whatever it is that you have to do. But that's the whole basic idea and the whole basic strategy. Now, where would your stop be if this move was to reverse against you? This move, if you entered in this, into this play somewhere in this range, okay, after the first 5 to 15 minutes, somewhere in this range, and we get 1-2 pops higher, maybe we come back down and we test a 20 SMA on the 1 hour time frame, and then we close below it, that's your exit. You take your small loss and you move along and you look for the next setup. That's how simple it is. And that's how fast you can make $100 a day in the stock market. I know this is very, very vague and very, very just general, but to be honest, trading the markets needs to be extremely simplified. It needs to be extremely generic. The more you think and the more you say, well, I don't think Microsoft is going higher, or I think that's as high as it's going to go, it's going to pull back, or I need to put this indicator on my screen and I need to read this tape and I need to, add VWAP and I need to look at volume and I need to do all these sorts of things. All those indicators all make sense. All that price action stuff all makes sense. But if you cannot follow your specific trading plan and strategy that you put in place for yourself. It doesn't matter what indicator you have. It doesn't matter what the stock, what you think the stock is doing. You don't think that Microsoft can go higher? Microsoft will rip 10% in a day. You know, I'm not like, that's not like saying that Microsoft is going to move 10% in a day. But what I'm saying is the minute you start to think that Microsoft can't do something, or any specific stock that you're trading can't do something, that is the minute that the market gods will tell you and show you that it can do whatever you think that it can't do. So we just need to make things extremely, extremely simple. We take pre-market highs, we take the pre-market lows. We let the first 5 to 15 minutes of the day play out. If we are currently trading over or reclaiming those pre-market highs when we're looking to go long, we buy a call. We buy a call that is either at the money, just 1 or 2 strikes out of the money, or if the stock gives it to you to where you can afford to play it in the money, 1 or 2 strikes. As soon as we get 25, 35, 50% move on our options contracts, we take profit. If you have a small account and you can only afford 1 options contract, obviously you would sell that 1 options contract. If you're playing with a little bit more size, let's say $10,000, $5,000, and you can afford 2, 3, 4 options contracts on Microsoft, then maybe at 25% we sell 1 options contract. Okay. And then maybe at 35%, 30%, we sell another options contract. And then maybe when that Microsoft move is at 50, 60%, we sell another options contract. And if you make 100%, okay, because trading options, it will happen. It's happened to me many times. Does it happen each and every single day? Of course not. But if you do get that 100% move, you take the rest of your profits. That's a fantastic trade. If you took 4 options contracts on this, you would have scaled 1 at 25, 1 at 30 or 40, 1 at 50 or 60%, and that last runner hits 100%. You take your profits, and that's how you scale out a trade, and that's how you really start to grow a trading account. But that's just the basics, guys. If you did like this video, please do me a favor, subscribe to my channel, join that Discord that's down in the description box below. Give me a thumbs up, and I will see you guys all on the next video.